Hello, all of you. Here we begin with the next chapter today, that is tax planning and all. But before that, last 4 classes we have done for assessment procedure. In that, the third class is section 147, which is very important. And fourth class was all the question answers related to assessment procedures and notice. Somewhere the language was little tricky and I have kept it as it is. You understand it. We need to interpret and read it. We need not mug up. You can write in points 1, point 2 in exam, and important points you can highlight also. Not like side heading and all. In the same running points, what you feel is the clue word you should highlight, because income tax is final is not a practical subject. It is an act, as if we are doing an act or a law. It's a statute, no? So that's why some language and some chapters are like law. So that's why I need to read it. But still, if you are not following anywhere, ask me. Let us now begin with this, a very simpler topic generally done in 1.5 class or 1 class or 2 class, depending on all your response. Tax planning, different aspects of tax planning. A very easy topic, base level is already there in the chapter 1 of your inter-direct taxation classes. And what we are doing right now is, why I have picked it up is, in between, though we are going to do next, the jumbo topic is MAT. But before that, why this kind of tax planning and all is, this topic is simple. If you understand 1 mark, 5 bits are surely asked in exam for 5 marks. And they'll give you some cases that SSC has done this. Is this tax planning? Is this tax avoidance? Or what it is you need to answer. So make sure coming half an hour, you listen carefully, take part in the discussion. You can give many examples. I'm giving examples. Once we are thorough, we will solve the question answers also in today's class only. Right? So sharing with all of you the notes. Orally, when I say I'm taking English class for the direct taxation today, in simple English, what do you mean by tax planning? Who can do the tax planning? Who is expert in the law? Who knows all the benefits of different kind of the heads of income and deductions and limitations and act and provisions? Who has done the proper study? He can do tax planning. Now, how do we generally do the tax planning? Every layman does simple tax planning is gross total income. Listen carefully to the example. I'll be giving many examples today. You're all 5 heads of income, clubbing, set off, whatever you get is called your gross total income. Actually, gross total income is the income on which you should pay tax. But you are claiming certain deductions from ATC to ATU, and then on total income you are paying tax. Now, what are those deductions? Suppose ATC, your income is 15 lakhs. I think I should share and then explain, so these terms will be very clear. Just give me 1 minute. I'll pick up a blank page from the journal. Tax planning, you all have the material till then, read it. Just 2 minutes. So we should understand the terms, tax planning, tax evasion. Then theory question also, if asked, it will be clear to all of you. And practical also, if anything is asked, it will be clear. Just 1 second now. Yes, can you see this? The blank page just I have taken to explain. Suppose your gross total income is 12 lakhs. Now on 12 lakhs, you have to pay the tax as per slab rate. But if you take ATC deduction, if you put 1.5 lakh in PPF, if you have taken ATD Mediclaim for yourself, for your parents and all, Mediclaim, ATD, and suppose you have given some nice donation to temple, church or Goshalas and all, which is eligible for more deduction, 50,000, like this. So what is your total income now? 9.5 lakhs. and you are ending up paying maximum 20% tax. Up to 5 lakh, 2.5%, 5 lakh to 10 lakh, 20% above 10 lakh. Otherwise, you are in above this. If your income is 12 lakhs, you are paying 30% tax above the 10 lakhs criteria. Correct or not? But now your total income has become 9.5 lakhs and you are ending up paying 20%. Okay. All right. So isn't this a tax planning? You're planning anyhow you have to do some saving. So rather than putting all your saving in share market, which is fluctuating, let us put something in PPF. ATC benefit also you will get. And second benefit is PPF interest also is exempt. It's not taxable in income from other sources. So like this, doing tax planning is not at all wrong. Many people plan the capital gains also. Suppose I have sold the house, sale consideration and all, and finally there's a long-term capital gain of 20 lakhs. Can I avail section 54 exemption by buying another house for 25 lakhs and the whole capital gain is exempt? Or I can put the money in 54 EC bonds or 54 EE specified mutual funds. So like this, there are many ways of planning the tax. I can give you many examples. Like suppose A and B are partners of a firm. These are all tax planning. A and B are partners. Partnership firm is paying 30% tax. Now partners, they want a building for their business. 3-floor building. What these partners are doing, they purchase the building in the name of their wives, Mrs. A and Mrs. B. This is an actual case around me. So partners, they purchase the building in the name of Mrs. A and Mrs. B. And now they are paying rent from the firm to the partner's wife. Is it allowed? There is no clubbing in this case. Partners are there in the firm. Their wives are owning the building. Can firm pay 1,80,000 say rent to each Mrs. A and Mrs. B? Answer is yes. Is this expenditure allowed for the firm? 180 and 180, yes. On 3,60,000, dear students, firm has saved 30% tax. Firm has saved 30% tax on 3,60,000. Clear? And now, ma'am, but again it is taxable in the hands of Mrs. A and Mrs. B. But Mrs. A and Mrs. B, they'll be paying the tax based on the slab rate. And they have basic exemption only 2,50,000. Suppose if they are having other income, still they will be ending up paying 5% tax, 20%, but not 30%. No? Are you getting? So like this, there is no harm in doing tax planning. The next aspect is tax evasion. Most dangerous, you can say. Tax evasion in Hindi, tax ki chori karna. You are suppressing your income. This is the cases when your case is picked up for scrutiny. Just day before yesterday, we did scrutiny assessment. What are the reasons? Tax evasion means you are trying to suppress your income. You are trying to show excess losses. Yes, you're trying to show excess losses. Or so sometimes what is happening, what is tax evasion? You are trying to suppress your income. I am charging fees from all of you, say 5,000, but I say pay 3,000 in for my course, 2,000 you just give me cash or just give me like that, some benefit in kind, something. So I'm trying to suppress my income. I'm trying to suppress my sales, or I'm trying to book excess losses, or I am showing excess expenses. There are 3 employees working in my firm, but I am showing salary of 5 employees. Salary paid to Ram Mohan, voucher banao, thumb dalo, put it. Where is Ram Mohan? Right now he's not there. Till last year he was working with us. Literally, when I was doing my articleship in 95 to 2000, hamare zamane mein, 97 I cleared my CA inter. So we used to go to an office. It was a bearing company, and they were there. We were doing the tax audit, and they were in those cabins are there, no, multiple offices are working at the same place. So one accountant, one salesman was there, and a small office was there because their main office was in Mumbai. We were doing the branch audit in Nagpur, my native place. Now see this example. They had put weekly puja expenses 500. How many weeks in a month? 4. How many months? 12. So कितना हो गया? 24,000, correct है? 24,000 is the weekly puja expenses they put. And what is the bill for puja expenses? We get prasad and nariyal and all and coconut. No bill for that. In short, they have tried to show fake expenses, and really there was not a single photo frame also. God's photo was also not there in their office. So like this, if people are trying to book fake expenses, they are trying to reduce. See, recently, all of you know I am teaching you income tax, but I want to add on one example. From 1st October, they have said that if your turnover exceeds 20 crores, mandatory, even the invoice, e-way bill to pehle hi banta tha GST mein, portal pe, you cannot process without making the e-way bill in the portal. Now the invoice is also in the portal. So no one can go backdated and make fake invoices or abhi to send invoice, then by the time the goods reach, we will cancel. People were doing a lot of manipulation. It's not possible. And everyone, I think, knows that now through your 26 AS and AIS and all, your turnover in GST is auto dropped in income tax. So no question of showing suppressed sales in the GST, even if you're filing your return in 44 AD and presumptive taxation. So tax evasion is tax ki chori karna, trying to reduce the income, trying to inflate expense, putting fake losses, and so on. Is it good? No. Is it bad? Very bad. Is it to be punished? Are there penalties if you're caught up that you're evading the tax? Yes. That's what in future is the next topic which we are going to do. Caesar survey. So, 2 aspects we have covered. This one is the assessment procedure. यहाँ से हमने शुरू किया. Tax planning is good. I gave you 2-3 examples. I can give you n number of examples. Like people who have their own money. Okay, I have 50 lakh rupees. नहीं है मेरे पास अभी drawer में. Just giving an example. Suppose I have 50 lakh rupees and I want to make down payment and purchase a single bedroom hall kitchen for 48 lakhs. Still, I will invest my 50 lakh outside and I will take housing loan for 48 lakhs. Why? Because I'm just buying this house for investment purpose. Are you all understanding my case? I'm staying in my own house. Additional house I'm getting at a nice rate, 48 lakhs. Chalo, we'll buy and put it on rent. It's ready to occupy. Single bedroom hall kitchen. Whatever rent will come, I will pay the EMI. Rent will come, I will pay the EMI. 10 years ke baad the property is free. And whatever EMI I am paying, principal is deductible in ATC, repayment of housing loan. Interest is deductible from rent, and you can show loss also in the housing loan. Isn't it a good planning? And my own money, housing loans are generally available 8 to 8.5%. And my own money I can invest outside at 12% and good returns. So people are doing this. 2-3 people who work together, they buy the house and they pay EMIs together, and 10 saal mein the ghar is free. So these are all like different aspects of tax planning. You can do it. Tax evasion, not to be done. Next one is tax management. Tax management is must to be done, and big organizations, they appoint professionals. Like timely compliance of TCS and TDS return on monthly basis by 7th of the month, make the payment, make your advance tax payment on time, employee related TDS and all deduct on time, give them TDS certificate properly. So all the compliances, if you buy and sell the property one time also 1% TDS is deducted in 194 IA, 194 LA. So all these compliances related to income tax, if you're doing on time, paying installments of tax properly in 4, 15%, 45%, 70%, and so on, that is called as tax management, and it is good to do that. Okay. In fact, it's good means it's the need. We don't shout and say to everyone, ma'am, today I have brushed, I had my breakfast, and then I'm listening to your class. It's like every day we do, है ना? Prudence principle की तरह. Same way, tax management is an inbuilt aspect of the business. You need to comply with all the compliances. Audit report you have to file by September, returns you have to file by October, and so on. Last one, which is the most complicated, you'll get n number of cases for this, is tax avoidance. Tax avoidance. Tax avoidance is to try to avoid the tax, plan your tax. But we are not planning the tax. We are molding the tax in our own way and we are trying to avoid the tax. Means, on the face of the income tax department, it looks, no, everything is neat and clean. I have paid salary to Ramlal and Shamlal, fake salary, but I have paid by check. I've put in their bank accounts. Now, if you check, nothing. So we are trying to avoid the payment of tax by manipulation, which is seen, but jo galti bhi karte hain badi finishing ke saath. I can give the example here is cross transactions, which is taught to you in clubbing. Mr. A gives to Mrs. A. This is a long back when we were students. Now Anil Ambani is not so much into the limelight, but that time Anil Ambani had gifted his wife Tina Ambani a yacht boat. As long as Mrs. A, she's enjoying the gift, no problem. Moment Tina Ambani gives it out on rent for hosting birthday parties and all, yacht boat. Okay. So this income will be clubbed in the hands of Mr. A. Yes or no? Gifting of property, assets, anything to spouse is not a problem. As long as spouse is using, no problem. But if spouse is getting income, that income is clubbed in the hands of husband. Clear? Now, same for Mr. A ka ek friend hai, Mr. Z. His problem is also same. Oh, if I gift to my wife, the income will be clubbed in my hands. So they do cross transfers, clearly seen by the department ki this is a cross transfer. Mr. A gives 5 lakh rupees FDs to Mrs. Z. And Mr. Z gives 5 lakh rupees some asset to Mrs. A. Now there is no relation, my friend's wife, no. So clubbing provisions are not attracted. Clubbing provisions are spouse and daughter-in-law. Watch the revision videos for clubbing and all, dear students, it will be clear. So Mr. A is gifting to Mrs. Z and Mr. Z is gifting to Mr. A. Same 5 lakh ka FD. Now government is saying in these cases a word used in law will intervene, and that is called as lifting of corporate veil. Lifting of corporate veil means remove the curtain and see the actual picture. In accounts, we call it as substance over the legal form. In income tax also, it is called as cross transfers clubbing. Answer for this is whatever Z has gifted that to Mrs. A, this income will be clubbed in his hands only. And Mr. A, whatever has gifted to Mrs. Z, that will be clubbed in the hands. So like this, they will see to it ki as if your spouse, you have gifted not to your friend's wife, but to your spouse only, and that income will be clubbed in your hands only. Now, on the face of the Income Tax Act, nothing is wrong in this transaction. Is my speed fine? Because this example is very important. Nothing, this chapter is taught like this only with examples. Nothing is wrong on the face, no, to my friend's wife if I'm gifting. If it is gift above 50,000 and related to movable property and all, if it is caught up in income from other sources, what take care? But otherwise there is no problem, no, here. So, but this is like trying to avoid the tax by manipulating. Even another example of tax avoidance is bond washing transaction, dividend stripping. Let me explain in just 1 or 2 lines. What is dividend stripping? I am owning 1000 shares of Reliance Industries, RAL. Now company decided record date 30th June 2022. They have said we are going to give dividend at 30%. And now we all know dividend is taxable. Gone are the days of CDT and DDT. Dividend is very well taxable in income from other sources. Now, 30th June, I'm going to receive the dividend. 25th June 2022, I transfer the shares cost to cost to my son. He's just become major and he's not having much income. So if this dividend is taxable in hands, no, nothing will be much taxable. 5 lakh se kam hai. He gets rebate and all, 87A, nothing is taxable. So what do? I transfer the share. And around 31st of July, I take it back again. So my shares are with me. What am I trying to do? I'm trying to avoid the tax. Now government said this kind of transfer of shares and this income will be taxable in the hands of transferor only. Who transferred the share? I transferred the share to my son. This income will be taxable in my hands. And if I show any loss in transfer of the shares to my son, that's not going to be allowed. Separately, we will discuss bond washing and all detail mein. But just coming to tax avoidance. So are all the 4 terms clear to you? Where did I start with the first one? Tax planning. It's a beautiful thing to do, provided you know all the rules and regulations. Next is tax evasion. No, not allowed. Next is tax management. Compliance. Zaruri hai. Last is tax avoidance. Tax avoidance is like you jump the red signal and if you have gone, no problem. If you're caught up and your picture is caught up, you get a notice and you have to pay the challan. So tax avoidance is like this. And along with, yeah,
can you just differentiate tax evasion and tax avoidance with small examples?
Tax evasion and avoidance. Very good question. See, tax avoidance is doing wrong within the 4 corners of law. This is the language in your books. Tax avoidance is doing wrong on the face of the law, doing wrong in the 4 corners of the law, as if you're trying to mold the law and no one can catch hold, because cross transfers, it. Unless not caught up, no one will come to know. No? So tax avoidance, to avoid the tax, you are trying to misuse the law. I'll give you one more example. Cash payment above rupees 10,000. Cash payment above rupees 10,000 in a single day related to business payment is not allowed under section 40. So what you are doing is you are paying 15,000 to someone at a time and you are asking him to sign on 2 vouchers. One for 8,000 with today's date, 26th October. Another for 7,000. है ना? 15 or 8. तो कितना आ रहा है? 7,000 with tomorrow's date. Now, if someone catches, ma'am, he came twice. Today he took 8 and 7. So you are trying, this is what? This is tax avoidance. You are trying to mold the tax and you are not caught up. And what is tax evasion? Tax evasion is, dear students, you are paying me rent 25,000 per month. But by check, you are paying me only 15,000. Remaining every month you come to my home and give me cash. How the department will come to know? Either suppress me, survey, search and all. And when they compare, oh, these kind of the properties in this area in Hyderabad, the rentals are 25, 27. How come they are paying rent only 15? That's why fair rent, municipal value, standard rent all. This is tax evasion, is outrightly suppressing the income. Here we are just deviating within the 4 corners of the law. On the face of the tax department, you are doing things wrong and they cannot do anything because you are doing it in such a way. One more example. I am like, this is my favorite topic. I can go on giving examples for hours, but last one, then we'll start reading. One more example of tax avoidance. What people used to do is, from many years, there is a rule that self-assessment tax, whatever you pay, 234 ABC interest, along with that you have to pay. Otherwise, your return will be treated as invalid. I also taught you the same in 139.9. Your return will be treated as defective return if you file your return without 234 ABC interest. Ma'am, they will calculate interest and send and I will pay the tax later. No, not allowed. Now, for my mother-in-law, she's a senior citizen and I had filed return and seen very senior citizen. So 5 lakhs tak to she doesn't have the tax only. So some TDS is deducted and she has to get refund now or little. So what happened? I filed the return instead of 31st July on 10th of August. Aram se I will file the return, no? Ma'am, you file the return on 10th August, no? File the return with 234A interest. Otherwise, your return will be treated as defective. Dipti ma'am ne सिखाया. Interest के बिना return upload किए तो return defective है. Correct. But interest you will calculate on what? Tax payable. What is tax payable for my mother-in-law? Nil. Are you getting what people were doing? We were losing the importance of due date, especially in those cases where अरे refund है या tax तो है ही नहीं, थोड़ा late भी भरेंगे. What will make a difference if we file little late? Anyhow, there is no tax payable. 234 ABC have to calculate on tax, no. So people were trying to manipulate and file the return late. Now what did they added over here? 234F. Irrespective of what is your tax, if you file the return late, you have to pay 1,000 penalty. If your total income exceeds 5 lakh, you have to pay 5,000 penalty. And I am calling it penalty. They have given a hi-fi name, 234F fees. Now what is this? I was trying to avoid the tax here, but now I am caught. So definitely the department is working that people should not avoid paying tax. And that is why direct information is going to department. Above 2 lakh rupees, you have done foreign currency conversion, department has the proof. Your credit card bills hai, your debit card hai, your birthday parties and 5-star clubs and all hai, your FDs above a limit, your saving account own withdrawal of the cash deposit above a limit, they have the detail. Why? Government doesn't want to leave a loophole. In tax avoidance, there are some loopholes and SSE is trying to take the benefit of the loopholes. So even if he's caught up, like he's saying, ma'am, मैं जो भी कर रहा हूँ, मैं 4 corners of law के अंदर ही है ना, क्या, what's the wrong in that? Tax evasion is outrightly you are suppressing the income, showing fake expenses. So I think enough examples I have given, and as and how we read, this is a very interesting topic and enjoy doing the questions also, what I will be doing little later today itself. Yes, chalo. Any doubts in the examples I have taken, please unmute and ask or put it in chat. So once again, I would explain what is that dividend stripping. The concept of dividend stripping is, I am the owner of the shares. I am going to receive the dividend, and always companies, they announce the record date. Record date is, see, share trading is going on continuously, dear students. So what the company does is, to whom they should give the dividend? Whoever is the holder of the share. So they stop. Suppose 30th of June 2022 is the record date. Before that, one day they will stop the trading, and whoever is the holder, they will give the dividend. So I am the holder of the shares for 1 year, I should get the dividend. But this dividend is given to my son. Why? Because just 3 days before, there's a time limit, before 6 months of the record date and 9 months. That detail, if I start, I will deviate. So I just gave the example that in bond washing, dividend, bond washing is same case for debenture interest also, whoever is the holder. So if this is the record date, I am transferring the shares to my son at cost to cost, whatever is the cost. So I am not paying much capital gain. And on that date, he is receiving the dividend. Again, after receiving the dividend, within 3 months, 6 months, I take back the shares again. So my holding is with me. And what did I avoid paying the tax on? What? Dividend. Dividend is taxable in the hands of my son. But then my son is not having any other income. So he will end up paying zero tax. Now, if department cracks this and that lifting of the corporate veil, no, this is exactly this and all, then dividend income will be taxable in my hands only. But what I'm saying, these cross transfers, these dividend stripping examples, what I'm giving for tax avoidance, if they are caught up, you're caught up. If not, it's going on. I told the once there is a red signal, 10 people have jumped the signal. 7 of them have gone and the police wala could not do anything. 3 of them he holded and he got the photograph. They will get the notice and chala. Huh? Right. Chalo, let us read now this all the 4 cases together. Tax planning. It is a way to reduce the tax liability by taking full advantage, ATC, deductions, this, exemptions, rebate, reliefs, and all. Tax avoidance is an exercise by which SSE legally takes advantage of the loophole. Legally, he is doing things wrong and you cannot do. You know that someone has got the payment 15,000 cash in single day, but 2 vouchers are there, 2 signatures are there. You cannot do anything. Tax evasion is illegal way to reduce the tax liability by deliberately suppressing income or sale, increasing expenses, which is finally resulting in reducing the income and tax. Tax management. It is a procedure to comply with the provisions of the law. This is very easy. Management, procedural part. Now, language reading is important. They might ask you a theory question, distinguish between not all the 4, any 2 of it. So pay attention and then just remember the points as it is. Copy karke exam mein nahi likhna hai aapko. Tax planning, I'm reading left to right. If you wish, at home you read once vertically and any doubt are there, you can ask me tomorrow. Tax planning is a practice to follow the provisions of law within the moral framework. Tax avoidance is practice of bending the law. This is you are following and you're planning properly. Okay, I have got capital gain, now I'm putting in bonds. I should get 50 for easy deduction. Here you are trying to bend the law. Tax evasion is illegal, it's wrong. And implementation, procedural part. Object of tax planning is to reduce the tax liability. Evasion kyun kar rahe? To reduce the tax liability. Why are you doing tax evasion and tax avoidance? To reduce. Tax management, why do you do? To comply properly with the provision. So this is the object. Approach. Tax planning is futuristic. You plan for future. Budgeting padhte hain na, costing mein. Planning for future. Tax evasion or avoidance is also futuristic. You try to, see one more thing. I can give a last one example, tax avoidance. I asked this to my students. Are you using two-wheeler? Yes, ma'am. That two-wheeler is in name of what? Firm, ma'am. Then you are using it for coming and going for your coaching, no? Yes, ma'am. So many times the two-wheeler is used by proprietor's son and they purchase the two-wheeler in the firm and they show all the repairing petrol expenses properly in the firm to claim depreciation, repairs, insurance, petrol, all expenses as if the vehicle is used by firm. Now, isn't it like tax avoidance? You are actually evading the tax only, but you are doing it within the law. Unless not clearly caught up, no one can go against you and say, no. Tax evasion is outrightly, it's seen that you are suppressing income or inflating losses and all. So these are all futuristic, just are for reading. Some points are good, learn it. Otherwise, just read it and enough. What they are asking in exam is not this. I will ask you what kind of questions they are asking. It is concerned with past and applied after the liability has arisen. It is done with negative approach to avail the benefit. What? Tax evasion. And tax planning management is continuous, no? You have to keep filing all details and all. Generally, this is long run. What? Planning. Generally, it arises short run. Avoidance. Generally, the benefit do not arise, but it causes penalties. And if you are not caught, fine. But agar tax evasion pakda gaya, like tax evasion mein, if you have hidden your income and if it is caught up in raid, you are ending up paying 78% tax. And last one is tax management. If you don't know properly, then again, if you file late return, interest and penalties and all. Next, keep your book in front so that columns will be clear to all of you. Treatment of the law. Tax planning uses the benefits of the law. Tax avoidance, it uses the loopholes. You're trying to bend the law. Tax evasion overrules the law. Forget what law is saying. 10,000 above payment. Array, what? I will pay 15,000 payment. Ask him to sign on 2 voucher. It just, you're not abiding by the law. And it implements the law. What is implementing the law? Tax management. Practice. How do you practice tax planning? By tax saving. How do you do tax avoidance? Tax hedging. Tax hedging is, swiping the income between the family members and all. Sometimes we try to divert the income, apply the income, I am getting rental income from the tenant and I'm saying to my tenant, this I have taught you in the first chapter also, that pay the this income to Manogna. She's my younger sister and she will use all the money for her coin. Can I say to government, Konsa rental income? I am to not getting rental income. My sister is getting, she is enjoying and she is actually studying in college. So even if the rental income is taxable, her basic exemption is 250. Can I do that? No. Tax evasion is tax concealment, hiding. Tax management is administration. Is it good to do the tax planning? Need? Yes. Desirable. Tax avoidance? Avoid it. Tax evasion? Objectional. Don't do it, I object, my lord. They say, like that, this language, you remember, it's not permissible only. Tax management is essential. Unnecessarily, if you don't deduct TDS and if you make full payment to someone, that expense is disallowed, your TDS return goes wrong, you end up paying 234 EFGH, wo sab fees lag jayega, and many other things. Your whole expense will be disallowed. It's essential. Morality. Is it moral in the nature? Tax planning, is it good to do? Yes. It is immoral. This is so complete illegal. And tax management. Is it moral? Yes. It is the duty of every SSC to comply. Check, please. Do you want me to explain anything anywhere in the language?
Just now you gave example, no, that he cannot say that this how I'm not earning any interest or something. So can we link up that with the beneficial owner or beneficial interest? That thing is there, no?
No, dear. In this case, I'm trying to divert my income to my sister. But this will be taxable in my hands only because income from house property says it will be taxable in hands whoever is the owner. Who is the owner? I'm the owner. It will be taxable in my hands. I'm trying to divert my income by saying to department, array, I didn't receive the rent, and also diversion of income is always taxable. Application of income is not taxable. My husband is getting salary, he's paying the tax on salary and he's giving that salary to me. Chalo, whatever household expense, my son's college fees and all I should pay. Again, I don't have to pay the tax on that. Got it?
How do we link up that with the beneficial owner and interest? We have studied under the first chapter.
Beneficial ownership. That is for beneficial ownership or substantial ownership. That concept is not there here. But just if you want to recollect, what is that also? Beneficial ownership ke case mein, legally I am owning 8% shares of the company. But I am the karta of an HUF where I am owning 9%. So 8 here and 9 here, that makes it 17%. More than 10% shares if I own, I will have substantial interest. And then deemed dividend and many other concepts we are caught up. So beneficial ownership is that, but it has got nothing to do with all this tax planning, tax avoidance.
Okay.
Just enjoy doing these topic. And now from here to it is all reading. So I'll just read the title, and in fact, then we can discuss some questions also. Doctrine of form and substance. I told you in tax planning, many times we see substance over the legal form. Form of transaction is to be considered in case of genuine. One more thing before I go ahead, I have talked with all of you for tax planning, tax avoidance. Actually, related to this one topic is there in international taxation. Just I want to say the names so that you have idea. GAR and SAR. Write down. What is full form of GAR? General Anti-Avoidance Rules. People, transfer their major incomes in tax haven countries where there is no tax. And in India, heavy tax, no? So they, Indian people, they buy at a very high rate from their own foreign branch. So ma'am, for foreign branch, it says no, but foreign branch, there, that country, no tax is there. So there are some GAR, general anti-avoidance rules, which I will teach you in international taxation. That is also a kind of like restriction so that people don't do tax avoidance and evasion. And SAR is specified anti-avoidance rules. Specified anti-avoidance rules. What I told you. Why they are saying above 10,000 you should not pay cash. Like that. So I was talking about GAR and SAR. We will do this in international taxation, but that is also to avoid the tax they have put. Like 2 of the SARs I have taught you now only. If by mistake I give you 100 payment and I misdeducting 30% TDS, government is saying this expense is not allowed in business aid. So that people should properly deduct the tax and pay. I'll tell you one more SAR, specified anti-avoidance rules. I am the deductor, you are the deductee. I have to deduct 1% TDS under 194C contract. Now, dear student, I'm telling you, you are the deductee, I have deductor, give me your PAN, I will put 1% TDS, you are not giving now, I will deduct 20% TDS. And then go and extra TDS deducted, get it as refund. So these are specified anti-avoidance so that people comply with the rules. Okay. This part is really interesting if you understand these 4 aspects. And in fact, leave aside ye thoda sa theory chhod ke, let us directly see how 5 marks 5-bit questions are asked in exam. I'll be reading all this. It's like frankly a GK class. Generally, how much we go inside and talk about 147 and 148. The simple topic. See, shall we all do together? At least all the 4 terms are clear. Then let us discuss these questions. Specify in brief reason whether the following act can be considered as tax management, tax planning, tax evasion with reasoning. Ma'am, I wrote the answer in the exam, tax evasion, tax management, 0 marks. You need to write the reason. Okay. So many times in professional exam, they ask you true and false also with reasoning. So reasoning is important. P has deposited. These are past exam questions from scanners. I have picked it up. P has deposited 50,000 in PPF so as to reduce the taxable income from 340 to 290. What is it? Is it tax management, tax planning, or evasion? Tax planning. He's planning ki, okay, TC deduction I will take, I will reduce the liability by use of beneficial provisions of law. But dear students, as I said, tax planning you can do. Tax planning you can do when you understand all the minuteness of the law. Next, PQR Industries installed an AC costing 75,000 at the residence of the director as per the terms of appointment. but treat it as fitted in the quality control in the factory. This is with the objective to treat it as a plant and machinery. And if AC is used in the office, then it is a expenses related to the business. So now what is this? Tax evasion. Literally you have done wrong. You have not trying to take the benefit. Literally you have done wrong, no? When you are using the AC at home, it's a personal expense. How can you claim it as business expense? So this is tax evasion. People, they buy laptops also for personal use, but they show it in the form double benefit. GST in the laptop and all, input tax credit they can claim if allowed in few cases. And then on the laptop, they claim depreciation also. Computers and laptop, 40% depreciation. So this is like tax ki chori karna. It is wrong. You're trying to inflate the expenses in the form of depreciation, which is not right. Third, SQL Limited maintains a register of TDS affected by it to enable timely compliance. Properly they are maintaining which TDS is deducted by view date. What the company is doing? Tax management. They need to comply by TDS, TCS, advanced tax, all filling up the challans and all. Objective is to ensure compliance with the law. Clear? Right. Now, R Limited issued a credit note for 40,000 for brokerage payable to Suresh, who is the son of our managing director. The purpose of this is to increase his income from 140 to 180 and reduce the income of the firm. Firm ki income to reduce it. No? So many times people show salary and commission to their son, to uncle, like this they do. Why they are doing it? Tax avoidance. To avoid the tax they are doing, making use. Now see, some of the students putting me message, ma'am, abhi bhi tax evasion or avoidance mein, there's a thin line but clear. Tax evasion is literally you are doing wrong only. Here what is you are doing? Maybe if the son is working and he desires commission, but his desirable commission may be 4,000. Just director son no pay 40,000. Company's income 30% will reduce, and director's hand anyhow it will be taxable, and he's not having much income. So tax avoidance, making use of the loophole. People do this around us. Every proprietorship partnership firm, they show salary, commission, brokerage to their relatives. That's why in 3CD report and all, they are asking, whatever are the payment made to relative, write it. And if it is reasonable, no problem. Sometimes if I am working as an accounts head in my husband's firm, it is okay because I'm a chartered accountant. I have knowledge, degree, I can do that. But if I'm a housewife, I have not even completed BCom and they're paying me 50,000 accounting charges. It's unreasonable, no? So when it is got into avoidance now, avoidance, if I say in simple term, it is caught up. If not, till it is avoided, nothing can be done. Tax evasion, whenever caught up, penalties and prosecutions and everything. How are these examples? Easy or not? If you take care of this one class, 5 out of 5 marks are yours. They will give you 4 bits, 5 bits, according to the paper pattern. And for every bit, you have to give the reasoning and check. Can we do one more question now? Let us see. Again same, is it tax manager? An individual taxpayer making tax saving FDs. If you make tax saving FDs, where do you get the benefit? ATC. What is it? Tax planning. You're trying to reduce the liability by use of beneficial provisions of law. A partnership firm obtaining declaration from lenders, depositors under 15GH and forwarding the same to income tax department. You know what? Partnership firm has taken unsecured loan from people. Now, suppose one of the person is a senior citizen. He's saying, sir, I have given you 5 lakh loan, 50,000 interest pay. Please don't deduct TDS because I'm a senior citizen. Meri to aur koi income nahi and all. So we take form from him. So when I take, see, partnership firm paying interest above 10,000 to anyone should deduct TDS. In fact, above 5,000 if it is interest other than interest on securities. Listen to me very carefully. So partnership firm, if they don't deduct TDS, they will be caught up. So they deduct the TDS. Now, the senior citizen is also correctly saying, sir, please, if you deduct 5,000 TDS, I'll just for TDS ka refund, I have to file my return. So then we are saying, okay, submit form 15G for normal and 15H for senior citizen. Now, partnership firm, when they are submitting their TDS return, 10 lakh interest paid to 10 people. 9 people TDS deducted, 1% TDS not deducted because he has submitted 15G form. So partnership firm is also safe. They have not done anything wrong. And the senior citizen. What is all this story? This is called as tax management. This is an administrative procedure. Next time in the year ending March, if you go to banks, no, big banners are put up outside the bank. Next time when you take a token number and sit in the bank, no, read on notice board, it is written that in the year ending March, if you don't want bank to deduct your TDS, please submit form number 15G and 15H. Otherwise, they will deduct surely. So this is a compliance aspect, tax management. Next, a company installed an AC 75,000 at the residence of director. Same case is there. It's a tax evasion. RR Limited issued credit note 80,000 as brokerage, who is the son of the MD. The purpose is to increase his total income and reduce the income of firm. This is also tax evasion. If it is reasonable, no problem. You're trying to bend and misuse the law up to a limit, okay. If it is caught up that son to India mein hai hi nahi, what commission you are giving? MD's son is in Canada and he's studying some other political science and something, nothing related to your company, and you are caught up. A company remitted PF contribution of both employer and employee on timely basis. This reminds me that PF contribution you have to make by 15th of next month. Otherwise, your PF payment as an employer is not allowed. Are you all getting? As an employer, I am contributing, say, 10% of the salary to Provident Fund. An employee's salary out of 100, also 10 I deduct and put in PF. But I have to do this by 15th of next month. Otherwise, this expense is not allowed. So I'm very sure that I'm going to do it before the due date. Now, what is this? This is to ensure comply with the law. So this is nothing but tax management. Are the questions easy or not? The first page table, same I am explaining to inter students also in the very first chapter. Distinguish between tax planning, tax avoidance, evasion. But these kind of practical questions are also asked. Last one, I want all of you to attempt it now. I'm here only and then check up. Enough of giving all the answers. Huh? Now you do it on your own and put the answers in the chat box. Start, your time starts now. Kar. I'm here only. Read it, attempt it, and send your answers in chat box. Yes. When you finish, tell me. This subject, it like super scoring. These bits come, you can score super well. Yes. Okay. It looks very easy, and I'm encouraging you that this chapter is easy, but कभी-कभी गलती होती है. Planning or compliance में गलती होती है. Avoidance and evasion, there are chances of going wrong. The first one is not right. Check your answers again. I'm waiting. All of you should answer, please. Yes, Manogna, you also put your answers. If it is wrong, it's okay, no? सब दीप्ति मैम नहीं पढ़ाते ना. First one is little tricky, but it is like superb. Very good, very good. Why so slow? Come up with a quick answer. Ekdam exam oriented knowledge this is. Those who have not watched yesterday's video, please watch it for all the 3 classes of assessment procedure, and especially 147 can be dropped and all. Only question answer discussion I have taken yesterday's video. So do cover it up. Okay. Chalo, enough time I have given. Still no one has given all the 4 answers correct. One is so wrong. But now you will check it with me. Chalo. Setting up of a license office in India by a foreign company instead of full-fledged establishment to run its business activities in India. Rather than full-fledged coming to India, you're just setting up a license office, say, wherein you just purchase and transfer. You're just coming to India, purchasing and going like that, huh? Instead of opening a branch. This is tax planning. Why you don't want to open full-fledged office in India? Because taxes are high in India. This is not tax management. Some of you are writing the answer tax management, and absolutely okay. This is your own room. Yahan bhar ke galtiyan karna. Another 3 days and we are going to do problems for math. Compulsory question. I'll be giving homeworks. I will then be checking also. At final homework, checking all this. Yeah, 3 hours paper. Dipti ma'am is not going to stand besides you, no? So do mistake, do attempt. Take your time. Those who are feeling it's management, no, management is compliance. Act is saying do this, do this, do this, and you are doing, that is called as tax management. ठीक है? So setting up of license office in India by foreign company, this is tax planning. They are doing the major business from other countries wherein there won't be any tax. Investment in bonds, 54 EC. Of course, this is tax planning to reduce your capital gain. Claiming depreciation for business purpose for a solar power generation system installed in the residence of the proprietor. This is purely tax evasion. You're doing it wrong, no? Tax evasion. And then you are saying, ma'am, bill hai. I have the bill of solar power. Ma'am, check payment is done by my office ka bank account. Everything is done wrong with finishing. That is tax, this evasion. It's wrong, no? Literally, you have done it wrong. How can you claim personal expenses here? And last one, HUF engaged in business paid salary to family members who were actually involved in the day-to-day work. Can HUF ke working mein some of the family members, co-partners are helping. So can they pay the salary? Yes, that's tax planning. You can reduce the income of the firm and do. Tax planning is like taking the best benefit of the tax laws. Do it, no problem. Until 5-6 years back, no one knew what was LLP. And now biggest benefit of LLP is taken by CA and CMA firms. Do you all know? Limited liability partnership. Because CAs, if they form partnership firm, there was an upper limit. How many partners? 8, 10, 15 partners. And can CAs and all work by forming a private company and all? No. because professionals' liability is unlimited in like tax audit and all, they are responsible. So they came up with, and now all the big firm, Price Waterhouse, this, that, Grant Thornton, they are all LLPs, wherein a CA CMA firm is having 80 to 85, 90 partners and branches across India, and they are working as LLP. Grant Thornton, LLP, Price Waterhouse, and all big four firms. So what is this, what is this? Tax planning. Huh? So check your answers now. I think except for the first one, appreciated. All of you gave all the answers correct. One second. Why are you still confused for the third one? This is not tax avoidance. This is evasion. You're doing things correct on the face. You're trying to mold the law. Solar power heater purchased in the name of the firm. Check payment made from the firm. Firm is saying used for the business. Can they claim depreciation? Actually, it is used at home or office. Who is coming and checking? Okay? Fourth one is not clear. Simple it is. HUF is engaged in the business. Okay? And suppose, generally HUFs, they have lot of ancestral property and they give it out on rent. So we have given our 5-6 properties on rent to Taj Group of Hotels, and they have developed and they are doing. So to manage this rental income, some of the members of the HUF, they are working. Okay, rent is every month collected, received, divided between the co-person. Someone is actively. Can we pay salary to him? Yes. Are we paying salary to the working partner in partnership firm? Is it manipulation? Is it wrong? No. Every partnership deed is having salary, interest, and all paid to partner. This is very well a tax planning, because firm is paying 30% tax. And if you pay salary and interest to partners, anyhow, income will go to partner as profit, or income will go to partner as salary and interest. Partner is saying, doesn't affect me, mujhe farak nahi padta. But if you pay profit, firm has to pay 30% tax. And if you pay salary and interest, firm is allowed as expense. And in the hands of partner, it is taxable as business income, but 2,50,000 basic exemption. Next 250 only 5%. So like this. So this is all tax planning, taking the best benefit of the law, provide for a deed in partnership, and just don't pay 3% interest to partners. Kya farak padta hai? No, pay 12%. Maximum allowed is 12%. Pay, no. This is like tax planning. Take maximum benefit of the law. I'll tell you one more example. Suppose my husband is already actually into a partnership firm and he's getting income from there. Now, he wanted to buy a property. So he purchased the property in my mother's name. Mother is getting rental income. We are staying in a joint family. Now he wanted to do share trading. So my husband is doing share trading, but he has purchased the shares all in my father-in-law's name. He's a senior citizen. 5 lakh tak koi tax nahi hai. And we have the will made that father ke baad all the shares will come to son. This is a tax planning. So like this, this topic is like that. I don't know if you can watch the video again. More than 30-40 examples I have given you. And keep it open. Let this go on till we go to international taxation and GAR. Huh? Chalo. One more question is there, third one. I have skipped that because now I want to talk little bit related to accounts, FM, all in taxation. Yes, yes, yes. And enjoy. It's a discussion. I don't want you all to go in much depth, because if I discuss now, I feel you all already know about all this. If you don't know, then ask me. See. Now we know that, is it good to do the tax planning? Yes or no? Is it good to do? Yes. Then what are the areas of the tax planning? Form or the organization. When you want to start a new business, decide you want to do it as a proprietorship or as a partnership firm with your wife or with your brother, or let us form an LLP, or how. So every form of organization is having its own tax benefits. Like proprietor cannot pay interest on capital to himself, but partners can get interest, no? And companies, can they pay salary to MDs? Can they pay dividend to share? So like this form of organization will have lot of tax planning. Second is location. I'm just discussing orally because again I'm saying it's like GK. Still anyone in the class is feeling my language is not clear, chat box I'm reading continuously, keep putting the messages. Location aspect. If I want to have a manufacturing unit in the heart of the Hyderabad, and then this is like India's map nahi hai, main India ke jaisa bana rahi hu. And then I send these goods to Chennai, and from there they are exported. Hyderabad to Chennai interstate sales. They say, kya pata, you will export from Chennai or you will sell locally in Chennai. So at many places I have to pay tax. Then I show the export related documents. Then I get the refund. Such a cumbersome procedure. Now, inside Hyderabad, I have SEZ, Special Economic Zone. Do manufacturing, trading, software, services, activities inside SEZ. All my inputs are tax free. And if I export my goods, if I export my services, I don't have to pay any tax. SEZ is like a foreign land inside India. So locational aspect is, if you locate your industry properly inside SEZ, suppose it's a cottage industry, and if you locate it in rural area, you will get a lot of subsidy, benefit from the government. I don't know how many of you are aware about the startups, that if you set up a startup in rural area, you get 25% subsidy for your plant and machinery, 50% for your building and so on. But promise you have to run the industry for 8 years, all. So these are all location benefits. Plan and decide. Next is niche, and this is where the professionals should have an expertise. CA CMAs are becoming valuation officers. They value shares, they value goodwill, they value other all investments of the company and all. For all these, you know, in amalgamation, mergers, demerger, also the mindset is of professional. Shall we merge the two company and form new company, or let this company get absorbed by another? Which is beneficial? These are aspects. Next is area of tax planning will depend a lot on the nature of business also. What kind of business? Retail, wholesale. Tax planning in case of the corporate restructuring. Now, when I talk about corporate restructuring, dear students, from tax seedha chalte hain FM. You want 10 crore rupees for your business. Will you go with an IPO of 10 crores? Absolutely no. You will take IPO of 5 crore. 3 crores you will take bank loan long term. 2 crore you might invest on debentures. This is taught to you in FM, no SFM. Debt and equity have their own benefits. Interest is allowed as expense. Dividend is not allowed. Debt is for, initially you need 10 crores. So issue debentures. After 2-3 years, your own profit will be sufficient. Thank you so much, debenture holders. Redeem, bye-bye, and save on the interest meter. So corporate restructuring. I'm teaching this topic orally out of my mind, but whatever I'm teaching is there in your material, printed. If you have any conflict, you have got one more chance to watch the video twice and ask me doubts. Next. Yeah, many flexi bonds you can issue. Many aspects are there. Tax planning in respect of FM, same. Tax planning in respect of employees remuneration. Aha, CA CMA entered today. I was teaching, you know, if I pay you basic 10,000, it will be taxable in your hands. But if I pay you basic 5,000 and I give you some medical facilities in the hospital maintained by employer, so this is somewhat exempt. So like this, you know, nowadays more amenities, perquisites, some kind of allowances if I give you, which will make it exempt, children allowance, uniform allowance. So like this, you can plan your employee structure in such a way that they don't end up paying more tax. Profession tax, this, that. Tax planning in specified managerial decision making. Okay. So some decisions when you make, that time also tax planning. Ye hai niche. Tax planning in case of non-residents. This is also super. More so we will talk when we do NRI taxation. NRIs, they can come and invest in the companies wherein 194 LWB and all, wherein TDS is deducted on their income 5%, 10%, and if they don't have any other income, no compliance is required. NRI को कोई document नहीं देना है, they don't have to file the return, nothing. So they are encouraged to invest in India in such a kind of investment that whatever tax they are liable to pay in India, fine, they are ready to pay in the form of TDS deducted, and they are free. And so many times when I say planning for NRI, it's like presumptive taxation for NRIs, 44 double B, 44 triple E. Huh? Are you doing some royalty related work in India? Pay this much percentage of one ship coming from USA and going to Sri Lanka, unloading, goods loading. Can we say, okay, go now, please come next year, file your return and pay the tax? It's cumbersome. Let the ship go, and while going collect 7.5% as income and on that tax and all. So these are all the compliance aspect. Let us read it. Form of, or these points which I have discussed are discussed here. Company is paying 30% tax, firm is paying 30%, but sole proprietorship slab rate. So if yours is a limited business within the city, do it proprietorship. If you need more capital, joint partnership with your son, with your husband, and with your friends or whatever, so that you get the benefit. And when you form partnership firm, make a proper deed and go by it, no problem. Remuneration can be paid to directors. Remuneration can be paid to working partners. Remuneration salary cannot be paid, and proprietor cannot pay salary to himself. Distribution of income is taxable in the hands of shareholders. In case of company, no such tax is required to paid, and no income is to be income which is given to partners is exempt in their hands form. And proprietorship में तो कोई case का सवाल ही नहीं है. Tax is treated like a drawings. Specified business expenditure allowed. Certain expenses are allowed in case of companies only, family planning, and many such expenses are allowed. Certain expenses are allowed in case of partnership firm, but limited, like salary and interest paid to. Proprietorship you don't pay, but expenses related to firm are allowed. So these are all the aspects. You decide which form of organization you want to go. Different SSE. Company is treated as different entity than the shareholder. Firm is treated as separate from the partner. Proprietorship is same. He has to include all the income, and it is not a separate entity. Decision making, an important business matter required to be dealt in proper meeting, and decision making takes time in company because meeting below and lot of compliance. Since partners of the firm meet more frequently, decisions can be owner to everything he's having in his pocket. I don't know how many of you people see your parents, your brothers doing business. They have not studied costing, accounts, taxation, but I really admire them. Out of the way example, in their pocket, in their diary, they have things on their tips. Okay, these are my datas, these are my cretas, ye karna hai. Very smartly. Okay, in a limited way, sole proprietorship, but nicely they manage their business. Risk is very less in case of proprietors firm. Partnership में थोड़ा divide हो जाएगा. Company तो risk and return go hand in hand, but then shareholders is separate and company is separate. Raising additional capital is by way of issuing shares. Partner can bring in more capital. Proprietor can bring in more capital, or he can take unsecured loan from the family members. Loan fund. Since the company has perpetual succession, lender is happy to lend the money in company. In companies, when they take loan, they give lot of security also in the form of mortgage of immovable properties and all. Partnership firm mein, okay, all the partners are jointly and severally liable. Proprietorship, if they take unsecured loans, like unsecured loans are restless. Proprietor is like single person. Agar usko kuch ho gaya, to who will pay the money? So these are all the aspects of different firms. Limited shareholders liability is different, partners liability is different, and proprietors liability is unlimited. Size of the organization, public company mein there's no limit kitna issue you can make an IPO of 1 crore, 10 crore, and partnership firm maximum 20 partners, proprietorship it is single person. So if you know these aspects, you can plan. Is my speed fine if I'm reading like this, or you want me to read word to word? And I'm telling you, you also just read it once and have a broad view so that you are able to answer the question. Question number 3, which I'm going to read, no? So that is, Abhi, I will say, case study based question it is. They might ask you. Yeah, all of you should respond. And still some part of it, if left, I'll do it in tomorrow's class. You can ask me, ma'am, this part. So form or for organization, which one is beneficial for me? Decide. If you want to start up and you want to have your branches in various cities, better form an LLP instead of partnership form so that you can add on more partners in more cities. So like that, different aspects are there. Now, tax structure. Is it different? This is like your first class, dear students. What do I teach here? Individuals are paying slab rate, firm no basic exemption, flat rate. Surcharge rates are different. For individuals, तो 50 lakh से शुरू हो जाता है. Firm and all above 1 crore, 12%, so on. ESS is there for all. Agricultural income step method, it is added. Heads of income for individual, all heads. Salary head will not come in HUF. Salary is like personal, no, only individual can receive. Interest on capital, some cases it is allowed, some cases it is not allowed. Remuneration, can the proprietor pay remuneration to himself? No. Can Karta get remuneration? Yes, but subject to 40A means reasonable. Unreasonable nahi dena. Can partner get remuneration? Yes, but up to 3 lakh of the book profit, 90%, balance book profit 60% limited. Director's remuneration also limited. Can you make payment to relatives? Yes, but reasonable. Can you buy and sell from relatives? Yes, but at arm's length. That's why in the 3CD report and all, they're asking you. Share of the income. Individuals, they have to pay the tax at slab rate. Partnership firm and all, the income is exempt because firm is already paying the tax and so on. Conversion of business. Yeah, when the proprietorship concern is converting into an LLP or a company, they are not liable to pay tax generally. So many times, private companies are also converted into LLP. All the directors, they become partners and all. So if they are converted, not much tax is there. Deductions. Individuals get lot of deductions. ATTTA, ATTTB, ATC and all. Taxations of HUF and all, limited deductions are there. But like companies and all, they get ATGGA, GGB and all that for donations and all, which these people don't get. Carry forward of losses and all, yes, it is allowed. Legal heirs can carry forward the losses of proprietorship concern. HUF continues to exist. HUF ko carry forward, one of the co-partners and all. Karta is also not there, then the next senior member will become Karta and HUF will go on. Carry forward of losses, there are some restrictions in partnership firm. I really want all of you, ऐसे लग रहा है कि मैं बहुत सारे chapters एक साथ पढ़ा रही हूँ. In partnership firm, if there are A, B, C, 3 partners and there is brought forward loss, say 90,000, if C is deceased, firm cannot carry forward 30,000 loss. Deceased partners loss lapses, firm cannot carry forward except unabsorbed depreciation. This is a super point taught to you in set of carry forward chapter. Are you clear? A and B can carry forward loss only 60,000. If you want, note down this example. I'm telling you one thing, dear students. Ma'am, kya padha rahe tax planning and where you are teaching? Listen to me carefully. All of you listen to me carefully. When papers are set for the final exam, direct taxation, they are not trying to make a very tough paper. It's a mindset. Paper na direct taxes ka tough aata hai. Cup method har baar aata hai. MAT har baar aata hai. DTA non-resident question as it is, they are going to come in exam. And you tell me, ma'am, this is your problem number 6 and 8. Trust me, I'm telling you. But one thing where students are losing marks is they are asking the questions in depth. How in depth you have studied. If you have studied set off and carry forward of losses, partnership firm is having 90,000 loss. Partnership firm can carry forward for 8 years. But ma'am, C is deceased, he is not there. Or uski jagah uska son, man, no one has come. Who are the partners? A and B. How much loss they can carry forward? Only 60,000. Except unabsorbed depreciation for C also they can carry forward. Unabsorbed depreciation till indefinite period you can carry forward. So like this minuteness, wherever I feel important, I will highlight and give you. Can you please take 2 minutes time and write this example? This 3D makeup, I call it. By this way you study, this is linking up so many topics. That's why I feel students, they ignore this. Array, ma'am, sometimes it is asked for 5 marks, we can leave in choice. It's not 5 marks. It's such a beautiful revision of so many topics, provided you study it in depth. And the questions are very easy. Right. Chalo. More questions from the recent mock test papers and MCQs also we will be discussing. At the back side of your material, MCQs are there, no? That also. Chalo. Now, mandatory filing of the return. So, who should mandatorily file the return? Individuals and all, if the gross total income basic exemption. Same. And whereas company and partnership firm, mandatorily, irrespective of their income, irrespective whether company has started the business. Ma'am, you taught us all this in return of income chapter. First lecture. Tax liability of the successor. This is a part of your syllabus. That if the person who's liable to pay the tax is deceased, who will pay his tax? Legal heads, widow, son, whoever is taking. After partition, members are jointly and severally liable to pay the tax of other partner. After dissolution of partnership firm also they are liable to pay. Directors of private company are liable, but public limited company directors are not liable to pay the tax. TDS compliance. For proprietorship concern, TDS is applicable only if the books of accounts are audited. Here, same. On HUFK case mein. But for partnership firm companies, TDS are necessary. Taxes on capital gain and all that we have seen. Now, location aspect, I just discussed it. If you go in SEZ and all, you will go in the backward area, you will get lot of benefits. And ATI, C&D, convention centers and hotels and all are set up. Acha, do you remember? Ye to ATI series hai. 35AD section, do you all remember? What is 35AD? 2-star and above hotel if you are setting up at tourism places like Meenakshi Temple, Madurai, Taj Mahal, Agra. These are the World Heritage Sites where we want tourists to come. There, if you set up 2-star and above hotel, you get 35AD deduction or 80I series. Any one you can take. But don't you think all these are location benefits? When you are deciding to set up a 3-star, 5-star hotel, why don't you set up in the area where you get benefit? So these are all location benefits. Northeastern states. Okay, handicrafts from the northeastern states, from Jammu and Kashmir. If you export the handicraft, you get deduction. So if you know, even it's discussed or not here, section 10AA. We have done no export turnover, export profit, total turnover, total profit. How do you get exemption? I'd combined it in alternative minimum tax and I taught you, but these are all locational benefit. Now, nature of the business. If you're doing tea, coffee, rubber development, you get a lot of benefit, 40% income exempt and 60% and like that. And business head also you get benefits. Okay, right? 35AD. This is also a benefit depending on the nature of the business. If you are doing some kind of leasing, hiring and all, you can file your return presumptive taxation 44A. If you are a professional and all, 44ADA and all. So like this, depending on the specified nature, see, this is all presumptive taxation for NRI. Business of operating aircraft, just pay 5%, show as your net profit in your receipts from India and go. Royalty income and all. So these are all benefits depending on the nature of the business. Same, few things are overlapping in the location also and the nature of the business. Tax planning related to corporate restructuring. It's like you do renovation of the house, you're renovating, you're revamping your capital. So all these tax planning. Ab dekho, I will give one example of buyback. Buyback of shares is like collar tight position for the company. Thank you, shareholders. When we needed money, now our profits are so vast. With the profits, we are buying back our own shares from the market and cancelling. Now, what is the consequence? You all know, buyback of shares, the company is only paying 20% tax with 12% surcharge and all. And buyback of shares is exempt in the hands of shareholder. So shareholder is saying, oh, if I sell the shares to my friends, I have to pay capital gain. If I sell the shares to company, buyback, company is paying the tax in my hands exempt. Beneficial to shareholder. Company, normally they pay 30% tax, but on buyback, they are paying 20% tax. And if they buyback of shares means buy the shares from the market and cancel. Have they reduced the dividend meter also for future? So these are all like corporate restructuring. One aspect is already covered in your amalgamation, demerger done properly. If 2 years say I am having losses, my company is merged in your company, you can set off my losses for the remaining 6 years. Yes. So all these benefits are given, no? What is capital reduction? If you want, you write down. Internal reconstruction, it is called. Capital reduction is internal reconstruction. Within the company, they make changes. If there are 1 lakh shares of 10 each, they convert it into 10 lakh shares of rupees 1 each. Ma'am, kya fayda? Capital is 10 lakh. Here also it is 10 lakh. Anyone having rupees 2 in his pocket can now afford to buy share of my company, which he was not able to buy earlier. So these are all conversion of debentures into shares. Oh, ऐसे लग रहा है पूरा capital gain chapter ही पढ़ा दे रहे हैं आपको. Debentures, if I have to redeem after a fixed period, I need money, dear students, to pay to debenture holders. Chalo, thank you so much. You gave 10 lakh, ye lo 10 lakh. But my money is all blocked in my business. Can I convert debentures into shares? So my capital employed is intact and I was paying them interest. Now I'm paying them dividend. And that conversion is done in such a way that no one will be at loss. Redemption of preference shares. Good. Fixed dividend you are paying. Conversion of company, conversion of foreign branch into subsidiary and conversion of company into LLP, private company, they convert. So all these are having its own tax benefits. Don't worry, detail, we have these topics. एक topic आपको table form में पढ़ाएंगे. Like now only mark slum sale I will teach you in business restructuring. It's a tax planning in business restructuring, separate topic. Slum sale, every time it comes 6 to 8 marks, compulsory question. What is slum sale? I'm selling you my whole business. You gave me 50 lakhs lump sum. Now I have to divide. Oh, 50 lakh mein how much you gave for plant and machinery? How much you gave for building? How much you gave for machinery? I have to call one valuer, you know. ये 50 lakh को divide करो so that I can calculate my capital gain and pay the tax to government. So to avoid all this, we have slum sale. Detail I will teach. So this is like overall topic, you know. Tax planning related to FM, I already covered it. Equity, debt, what are the benefits in having different kind of the capital structure. Lease or buy. Instead of outrightly buying and putting all your money, take it on lease. Finance lease, operating lease. I told you if I want plant and machinery of 10 lakh, I am having in my bank account 10 lakh. Still, I can take plant and machinery on EMIs. And interest I can deduct in P&L account. And then slowly every year, whatever I am earning, that machinery will be mine. And this 10 lakhs, I can invest it at 12% higher rate. Like I gave you proprietors. If they have 50 lakhs, still they are taking housing loan. Same way. Company ke liye, you want a 4-wheeler tempo traveler, go and buy it on EMI. 8% pe mil raha hai, vehicle loan. Why to get 12% money and put it and all? So like this, you can claim lot of benefit in, rather than outrightly buying, take it on lease. And leased asset pay also you can claim depreciation, no? If it is finance lease, if it is operating lease, interest is allowed, and so on. Are you all clear? Yeah, this is all purely in FM. Sometimes, I have plant and machinery. I'm using it for my business. I need money. So I sell the plant and machinery. I do it to you. Arey, but ma'am, plant and machinery chala jayega, so what will I do? And then I will lease back. Sale and lease back. So now I'm paying lease rent outrightly as well. So like this, yes, the all detail you will study in FM. Okay. And now last part here, form and substance in the context of tax planning. This is like many times what they are saying, rather than legal form, they said, no, as you do the lifting of corporate veil in law, so they can check up here. That time only, no one will shout and say, ma'am, we have done, dividend stripping. We have planned that dividend is different. No one will say if there are cross transfers, which is taught to you in clubbing. These are when they are caught up, they are caught up. Okay? Right? So many times, to understand the tax planning, what they are saying is legal form of the transaction should not be ignored by probing into substance unless it is malified. Legally, what is right, check it and do it. Unless you feel that it is tainted and kuch na kuch manipulations. Substance of the transactions cannot be probed into without considering the legal form. Where transactions is entered into with a malified intention, then such substance of transaction should be investigated in detail. And if you don't get any proof, and if they have tried to bend the law, but everything is proper, check payment is done, and plant and machinery is brought in business, and all repairing and petrol. Sometimes have you seen your father telling you, beta, gaadi chalate ho, thode petrol ke bill laya karo. Pata chala in the audit that there is a two-wheeler in the name of the firm and not a single petrol bill is there, then that is not a tax avoidance. It is clearly seen it's not used in the name of firm. In deciding whether a transaction is genuine or colorable, it will be open to authorities to pierce the corporate veil and look behind the legal thing. Can they inquire everywhere the department? That's why that survey, Sunrise to Sunset, and that raid cases, and 147, when they have a fact with them that income has escaped assessment, they can do. Where transaction is colored and non-genuine or it is malified, the form of transaction is ignored and they will check the substance over form. Exactly same what we do in accounts. Significance of documents on record is clear, but document cannot be ignored merely on the ground that they lead to tax avoidance. So they will check all these aspects. I think major part we have done. Let me cover up one last question and then remaining we can do it tomorrow. Third one. It's a case study based question and how to answer I will say. Anyone is having any doubt, or shall I read the third one? Read all this. Tomorrow also I will start the ICDS. ICDS is a part of your business income. Maybe पूछते हैं अलग से भी. If there is an AS and ICDS and conflict, then what you have to remember for income tax purpose and all. Asked in MCQs also, ICDS. Chalo. But definitely I'll cover up whatever are your doubts and then we will start ICDS. Shall we read? Anyone is having any more doubt? This is all like reading part, that sometimes they can go in depth and check the substance and not the legal form. Chalo, let us read this case. This is your study material question. Mr. Gavarkar sought VRS from Government of India and received compensation 40 lakhs. When you retire before your time, you get lump sum money, VRS. He is planning to use the money as capital for a business dealership in electronic goods. Oh, after retirement, he doesn't want to go into spiritual activities. He wants to do business, electronic goods. The manufacture of the product requires a security deposit of 15 lakhs, which would carry him interest at 8%. Gavaskar's wife is a graduate and has worked as marketing manager in multinational companies. So she's having good knowledge. She now looks for a change in employment and she's willing to join her husband's business. Now Gavaskar is confused. Shall I take my wife as a partner? Shall we form partnership firm? Or let me do it as a proprietorship and let me pay salary to my wife? She expects an annual income of 3 lakhs. Good. Mr. Gavaskar would like to draw a monthly remuneration of 40,000 and also interest at 10% on his capital. Gavaskar, if you want to get salary and if you want to get interest on capital, you need to form partnership. You cannot pay salary and interest if it is a proprietorship firm. This is what I explained you in the last half an hour. Now I'm applying that knowledge in this case study. Mr. Gavaskar had approached you for tax efficient structure of the business. Discuss the various issues which are required to be considered for formulating your advice. Computation of income or tax liability is not required. Okay? So Mr. Gavaskar has approached you for a tax efficient structure. Now first you all tell. What all are the options with Mr. and Mrs. Gavaskar? Kya karna chahiye? What they will do? You need to answer these case studies in a very open way. Yeah, generally salary paid to spouse is taxable in the hands of the husband, clubbing provisions. Now see, clubbing is taught in Inter, but it's discussed here. That's why I'm saying Inter videos are already provided to you. Watch those videos, then you will understand these classes better, even if you have had a gap of whatever years. So listen all of you, when salary is paid to wife from a firm where husband is a partner and director, that salary is clubbed in the hands of husband. But if the wife is having professional qualification and all, then absolutely no problem. Then the clubbing provisions will not attract. So here the answer is, first option is Gavaskar can form a sole proprietorship firm and pay reasonable salary to Mrs. G. Gavaskar अपने wife को salary pay कर सकते हैं. He can form proprietorship. He has already got 40 lakhs and 15 lakhs he can give the security deposit and all. No problem. Second option is he can form partnership firm with wife. The benefit of forming partnership firm is that both the partners can get salary and remuneration from the firm. But when it is sole proprietorship, they will pay the tax as per the slab rates. When it is partnership firm, they will pay the tax as per the flat rate. If it is sole proprietorship, Gavaskar cannot pay salary and interest to himself. If it is partnership firm, absolutely no problem. As per the act, on the book profit up to 3 lakh 90% on balance, you can pay. So like this, 1 by 1, 5, 6 good points you have to write. I'm telling you, don't write answers in paragraph. Write in points. While writing the points with the same pen, underline the clue words so that make the reading part comfortable for the paper corrector. Note down if you want to note. Option 1, sole proprietorship, slab rates, salary to Mrs. G. Option 2, partnership firm, flat rate, salary and remuneration can be paid to Mr. and Mrs. G. दोनों के हाथ में. So they can go for both these options. Others are not desirable. No need to form an LLP and company because the investment is very less. You just need security deposit 15 lakhs and it's an electronic goods showroom. You don't need huge capital and all. and no point in going location benefit and all, because it's a simple business. Clear how we have applied the knowledge? Please, all of you should message me, are you satisfied or not? Will you be able to attempt these kind of questions? But I'm telling you the reason I'm taking these kind of topics. First is, now more you read, no, you will try to analyze everywhere. Ma'am, is this tax avoidance? Is this tax evasion? Ma'am, is this tax planning or is this tax management? Like this, like this, like this. Open it up and keep this topic open. This is not a topic ki aaj khatam ho gaya and done and let us move ahead. It's continuous. Read it, and if you have any doubt, we will continue with remaining. Can I ask you all to please read and come this part, so that tomorrow before I start ICDS, I will just this same legal form and substance over form, same. Just read and come this. I'm literally saying R for reading. यहाँ से तो मैंने पढ़ा है tax planning के जो aspects हैं, and then different kind of the tax plannings are there. ठीक है. I've read it from here, but 1 or 2 pages we did not cover. I'm not going to skip anything. I will cover it up tomorrow. In fact, I always split the class into 2 so that first I can again revise. Let 10-15 minutes go by. Few things are to be understood. Few things are to be learn करके खा जाना है chew करके, so that in exam these 4 are your best friends. Tax management, compliance, compliance, compliance. Tax planning, take the best benefit of all the exemptions, deductions and all. Tax evasion, outrightly wrong, suppressing income, increasing expense. And tax avoidance, it's wrong, but within the 4 corners of the legally everything is appearing right. That plant and machinery of the vehicle used by my son, claiming the depreciation here, bill form ke naam se GST hai, we have paid by check, we have repairing bills, we have taken insurance in the name of firm. If it is used by my son, why would firm pay premium for insurance of the vehicle? So things are very neat, but we know it is tax avoidance. Actually, the vehicle is used by son. So like this, it's a very interesting topic. Hope I have justified. And tomorrow we are going to do ICDS exclusively. Those who are asking, just 2 things. ICDS separately. Inter mein to write a short note on ICDS. In final, ICDS and your INDAS and AS comparative. Problems are asked, especially AS 13, investment, how they are valuing. So there is a lot of repeatedness, 5 marks question. Another thing is, while computing business income of the company, I need to take care of the ICDS, no? If I have received government grant, if there is a closing stock and all. So these aspects we will be starting from tomorrow. That's all for today's class, dear students. We exceeded a little bit, but it was on linked topic. Thank you so much. Bye-bye, all of you. Keep checking. If you have any doubts, you can ask me. Bye-bye.